The Fed allowed major firms to buy assets with BlackRock, managing Fed buyback programs. So they allowed a hedge fund to run the asset programs, the Federal Reserve, right? And again, I'm going to keep putting the emphasis on it. You have to have patience and you have to have discipline to get these type of returns long term. Next, inflation is slowly eating away at our pockets every single day, and we can't feel it. That's why it's scary. So this is the buying power of $100 over 90 years, going back to 1934, right? It's worth $4.25. I went and I did the research and I did the calculation for you. Every day that we hold cash, we're losing 3.25% of our purchasing power every single year. So you're already starting out at a disadvantage starting the year. We know every single year we're going to lose 3.25% of our money if we keep holding on to cash. That's why you want to be asset rich and cash poor. Again, you want to be asset rich and cash poor. And then I want to ask you guys a question. If you can make money going long or short, why do we care which direction the market is going? The value of our dollar is not doing anything but going down, right? It has not done anything but go down. So how come we can't make money going long and short, trading these companies and learning these companies? Next, I want to let you guys know something. You deserve the world and you need to go create the life that you always wanted, right? We are the main characters of our life. It's nobody but us, right? I know a lot of things happen outside of our life, right? Or outside of us that we just have to deal with it, right? We all don't get the same cars when we're born, right? We're born in different cities, different states, different circumstances, right? But at the end of the day, we are the main character. So we need to take control and dictate our future, or someone else is going to do it for us. So the hedge funds are buying up all the single family homes and they're going to try to raise the prices. And they keep saying, we will own nothing and be happy. That is an outside entity trying to take control of your life. That is a threat financially to you and your family, right? And the real direction of your life is determined by your ability to adapt, have patience, stay consistent, stay resilient, accept being wrong, and evolve. Those are the real traits that nobody tells you about, right? So when it comes to trading, you want to get a better strategy, or you want to try a different strategy, or you want to try a different time frame, or you want to do something different. That's not what you need to pay attention to. You need to pay attention to yourself. Are you being patient? Are you being consistent? Are you doing the same thing over and over? When it gets hard, are you being resilient, right? If you're wrong on the trade, then be wrong and evolve from it, learn from it. Stop trying to hold your losses, cut them short. And these are traits that can't be taught and they can only be built. So we have to work on them every single day. Next, the rise in the S&P 500 this year has been one of the strongest since 1928. So this year was an anomaly year. So I want to ask you guys a question again. Will your strategy work when the market changes? So if you look on the right-hand side, these are the returns year to date of the market going back to 2011, right? So no matter what the market does, if we can make money going long or short, we need to be able to make money in any type of market environment. Whether the market is going up, whether the market is going down, no matter what it's doing, we need to be able to make money because guess what? Our cash is losing 3.25%. So we can't sit on that. Inflation is rising, grocery prices are rising, home prices are rising and are going to continue to rise, right? We know with the campaign that's in office now, there's going to be a lot more debt and a lot more inflation. They're trying to take away the debt ceiling, which means they're trying to print more money. If they're trying to print more money, then the value of your dollar is going to decrease even faster than 3.25% each year. So we have to make money no matter what the market is doing. Right, so I just want to let you guys know this was an anomaly year. Don't get used to it, right? Because the average return is 7 to 12%. We've had a few good years going back since 2017. We've had double-digit years since pretty much 2016 when we were positive, right? Almost 12% since 2016. Every time that we were positive. So again, you need to make sure your strategy works no matter what market environment that we are in, whether we are up, down, sideways, Go long, go short, and make your money. Next. This is what happened when companies fail to innovate, right? So Intel. So next time you try to, or you want to long-term invest in a company, you need to pay attention to their acquisitions and who they're acquiring. Because if the company is really going to be an amazing company and a great company, they're going to put their money where their mouth is all the time. So they're going to acquire other companies and buy other businesses that is going to help them, right? So just think about all the companies that Apple has acquired, or all the companies that Microsoft has acquired, right? Apple bought Beats way back when, amazing acquisition, right? But let's pay attention to Intel, right? They did not prioritize GPUs, right? They wanted to keep making the chip for the PCU. They're making the wrong chip, right? They fumbled a deal with Apple. They didn't pursue an acquisition of NVIDIA. This is a company that used to make $50–60 billion a year. And you let NVIDIA, AMD, Qualcomm, ASML come eat you alive, right? They didn't focus on EUV lithography, which ASML is literally the only company really that does that type of infrastructure, which is needed for the semiconductor space. So they failed to do that. They turned down a stake in OpenAI, and we see what OpenAI is becoming with ChatGPT, right? And a lot of other things that I can name on this list. But long story short, business is financial war, and if you don't innovate, somebody else will. And this applies to your life as well. If you don't want to do the work, there is somebody else who is going to take it from you, right? So we all want to trade and invest and be successful. Do you think Warren Buffett is asleep right now? No. George Soros, right? Ed Sequoia, Paul Tudor Jones, right? Jim Simmons when he was alive, Ed Thorpe. All of these legendary investors are investing in their 90s, 80s. They doing this for forever, right? They're not stopping because they know if they stop innovating, somebody else will come and take over their business. Warren Buffett wants to make Berkshire Hathaway a family business, right? Him and Charlie Munger came together, and then because of that, their kids are going to eat forever, right? But they kept their foot on the gas. Warren still has his foot on the gas to this day. We need to do the same thing. Next, stock market hype cycle. I want you guys to understand something because I know altcoins are about to start running up, and I know you guys are going to probably want to buy the altcoins, right? Even though they really don't have value. If it goes up fast, gravity will pull it down even faster when it's time to fall. I need you guys to always go back to nature and go back to Newton's 3 laws, right? It applies with the market as well. So if something runs up really, really fast, it's going to have a fall really, really fast, right? And you want the asset to have a gradual rise. So you don't see value stocks having major volatility or major crashes because they gradually rise, right? A company like Walmart, company like Waste Management, company like Caterpillar, company like Deere, right? Company like Procter & Gamble, they have gradual increases year over year. So they are less likely to have major crashes. But these altcoins that don't have any value attached to them, somebody tell me why an altcoin should be more valuable than Apple, NVIDIA, Microsoft, or Google, or what those altcoins do better than Apple, Microsoft, and Google to make you really want to invest in those companies. Like a lot of times we're investing in companies and we don't even have a reason, right? Right? Somebody said in the chat, they just hype. Really, that's really what they are, just hype, to be honest, right? Next. So Jerome Powell said it might take another year or two to get inflation down to 2%, right? I'm gonna tell you guys something right now. We're going to get through the inflationary environment. We always get through the inflationary environment. You need to start looking at other places. You need to start looking at debt. Our debt is the real issue that we need to be worried about. Inflation is not really the real issue. I know it hurts. I know it's painful. That's why we need to invest with precision, right? We need to outpace inflation every single year, year in, year out, no matter if the market is going up or down, right? I understand groceries is going to go up. Home prices are going to go up, right? We can combat that. But the debt is a real issue that we really need to worry about. That's our economy. That's something that we cannot control. us, right? And if our debt gets too high, you guys need to go read the book, The Changing of World Order by Ray Dalio, so you can start understanding currencies and start understanding super cycles, 100, 150, and 200-year cycles of how economies work. Because Great Britain used to have the reserve currency at one point. They no longer have that, right? China used to have the reserve currency at one point. They don't have that anymore. It's us, right? So if we lose that, I'm not saying we're going to become a second world country or a third world country, but we're not going to be the same America that we are now. So here are 4 books that I just got. I will be reading the Principles of Economics next. If you guys want to read that book along with me, I have 2 other books. I'm going to finish up really quick. That is the next book that I'm going to read. Next, trading tip. Find your setups on the weekend and execute throughout the week. Too many times I see a lot of us scrambling because we didn't put in the preparation and we didn't put in the work, right? The weekend, the market is closed. That's when you need to start looking for setups. You need to look at the chart. You need to look at fundamentals and really do your analysis. And then when the market opens throughout the week, it's go time. It's nothing but execution, right? Consistency in trading comes from discipline, focus, and confidence, not trying to avoid losses. So one of the things Trap says, right? He says he's looking for the loss. He doesn't avoid losses, right? There's no reason for you to run away from a loss, because when you take a loss, it's going to give you information and data of why you lost, which then you can refine your strategy and make it better, right? But if we're scrambling and we don't know what we're doing and we're really just guessing, right? You don't even know what to refine because you don't really have a system. If you don't have a system, you don't know what to fix. So a lot of us are just taking losses and just taking the loss. We're not learning from it. We're not using the loss to make us better. You just took a loss for no reason. And if you're not even going to learn from it, then it's really a L. It's not even a lesson. It's a real L because we're not learning from it. There's no 100% win rate strategy in trading, right? Or investing strategy. Technically there is, but most of us are not patient enough to wait 2 years to buy an investment or wait 2 years to trade. Every 2 years when the market falls, right, you can have a foolproof strategy and do that, right? But most of us are not patient and we want action, right? Which is fine, but you just need to have a strategy in the system. Last thing I want to tell you is follow the money, right? So if you look on the right-hand side, right, you got your top big bets. These are hedge funds and institutional investors and what they are holding, what they are buying. 10 buys the last quarter, that was Q3, Microsoft, Visa, Disney, Amazon. And pay attention to the companies that are running up. Microsoft is running up now. Amazon has been running up. Flutter has been running up, right? Apple has been running up. Google has been running up, right? And then pay attention to the top 10 buys for the last 2 quarters, right? Similar companies. And then you will find companies that are trading above the averages each year. Next, there's nothing in nature that blooms all year round. So don't expect yourself to do it either. Don't expect to do it in your trading, right? Don't do it in your trading, right? We all go through seasons. So some of us might be in a learning season, right? Some of us might be in the execution season, right? Some of us might be in that under the wing season where you're almost ready, right? It's almost time to bloom, but you just need a little bit more practice, right? And some of us may just be getting started. Wherever you are, don't rush the process, right? Do not force yourself outside of your trading season or your investing season. Wherever you are, stay there, learn wherever you are, right? Focus, pay attention, learn, and then move to the next season as time comes, right? And then I want you guys to always know what season you are in and the season that the market is in, right? So right now the market is in bloom season, right? Been going up all year. Stock market as a whole is in a blooming season, right? And I want you guys to understand this. In April, we will rise. The market will go up. July, we will rise. The market will go up, right? September, we will fall. In November, we will rise, right? And in the summer, when volatility is low, so that's June, July, you need to have a shorter target when you're trading because there's less volatility. There's less people trading in the market because there are people who are going on vacation, right? They're going to Branson, they're going to Lake of the Ozarks, they're going to Florida, wherever they're going, they're taking their family trips to Colorado, wherever you're going, right? There's less people trading and there's less people in the market. So you need to have a shorter target in the summertime. Next, the calm mind sees what the crowd misses, right? The calm mind sees what the crowd misses, right? So when the market is falling and it's falling fast, right? So 2020, 2022, August 5th, right? Everybody else is panicking. I want to be patient and I want to be calm so I can actually see things for what they are. You want to stay calm in pretty much any situation so you can see it for what it really is and actually have a good reaction. You don't want to act off of emotion, especially in a high intense situation, right? Because it can go left easily, right? You can make a wrong decision. You can make a bad trade, right? And if the market is falling super fast, right? You can lose a lot of money, especially since a lot of you are not using stop losses, right? And we do not want that to happen. I want all of you guys to stay in the game, and I want all of you guys to invest and trade for a long time, right? But we have to be calm, right? Do not allow your emotion to take control. You are the computer, right? You, yourself, us as people, we are the computer, and what we program in our minds daily determines our subconscious and truly determines how we will act and how we will be, right? So if you guys just read what's in the highlight, cleaning up your thoughts, right? Psychologists believe our mind have two levels: the conscious mind, the state that we are aware of in our daily interactions, and the subconscious mind, the mental state working behind the scenes and pulling the strings that we can't readily see, right? And most of us think we make our decisions intentionally with our conscious mind. In reality, however, most of our decisions are driven by the subconscious mind, which goes back to what you are programming in your mind, right? And on the right, I want you guys to understand, in a stable economic environment, things like PE ratio and earnings will matter more for stocks, right? In irrational, emotional driven environments like now, these measurements will not matter nearly as much because people are only thinking about the future, being recessions, being the next growth sector, right? I haven't really heard anything about a PE ratio this year, right? All these companies are trading at all-time highs. I haven't heard one thing about a PE ratio, right? I never paid attention to PE ratios anyway. To me, they don't really matter, right? But we are in a market where we are solely focused on the future. Most analysts and people are solely thinking about the future, especially since this was an election year. We're looking towards the next 2 years, the next 4 years. So the market is in an irrational state. So a PE ratio does not matter. And last thing, when you know your why, the how becomes easy. It's a quote from Eric Thomas. When you know your why, the how becomes easy, right? So I want you guys to ask yourself a question. How many days have you really slacked off this year? Because we're in December, right? That time when you could have read, that time when you could have looked at the market, right? That time when you could have watched the news, right? You could have just read this short article on CNBC, right? It's the little things that add up over time that we don't pay attention to. But I want you to try to add up all of those times, right? 30 minutes, 45 minutes, right? We on our phone we on Instagram, we on TikTok, right? Imagine if you just replaced half of that time with reading an article, right? CNBC, Reuters, Bloomberg, right? Just imagine how much more progress you would have had, right? Add up all of that time, really. Sit and add up all of that time, right? 30 minutes each day, 45 minutes each day. That adds up over the course of the year. We almost 365 days in, and then we're going to go into the new year, right? So a lot of us are going to have New Year's resolutions, right? But did you accomplish your New Year's resolutions that you had for this year? Did we really accomplish those? The ones that we set out when we were in 2023 and we came into 2024, right? Did we accomplish those goals that we said we were going to accomplish? And if we didn't, you need to double down and go back to those same goals that you missed and hit those, right? And a lot of us, you need one long target goal for the year, one big target, one big goal, So you want to make 500% on a trade. You want to make 1,000% on a trade. You want to buy a car. You want to buy a home, whatever it is, right? You want to go on a vacation, a big vacation, right? Wherever it is, right? Have one big goal. And then you need to have little small goals that you can hit every single day, right? Or every single week. So mine is reading, right? I want to read almost 100 pages a week, right? I don't read every day. I read every other day, right? Small goals, right? Then boom, another one. I want to color more, right? I like coloring. Small goals, right? A lot of times I get caught up in investing and doing all this stuff, right? You got to go back to having fun, right? Coloring, something simple, something that I like, something achievable, right? That's also going to satisfy, me as well. I can have fun, but it's also going to help me when I go back to the work of being creative, right? Next goal. I want to help a lot more people make money this year, right? 2025. One big goal that I have, I want to create my first millionaire this year, right? So write down your goals and keep track of them. You need to write them down and you need to see them every single day so you can remember them. So when you don't feel like doing something, ask yourself, would your future self really be okay with you slacking off? Right? Because right now we're operating from who we are right now. We need to be operating from who we think we are going to be. I always try to operate as if I'm my future self. I have everything that I want already. I'm just waiting for it to come to me. But I need to operate as if I'm already my future self. I need to hold myself to that standard every day until it becomes a norm for me. And you all need to do the same. Next, let's focus on next week. It's a short week. We have Christmas on Wednesday. Happy early Christmas to everybody. I hope everybody has a good Christmas. But Monday we have consumer confidence. That won't really move the market much, but it is important to look at. We have durable goods on Tuesday, and then durable goods minus autos. New home sales. Pay attention to new home sales because that is going to give you an indication of the home building sector, right? So companies like Caterpillar, the lottery pick that Trap put in recently, that company does maintenance and lighting and stuff like that, and installation and things like that. Those are the companies that are going to benefit if we have higher new home sales than expected, right? Wednesday, Christmas, take that day off, right? Spend the time with your family. Thursday, initial jobless claims that definitely will move the market, depending on how good it comes in. And then Friday we have advanced U.S. balance in goods and advanced retail inventories and advanced wholesale inventories. I don't really pay attention to those much, but you do need to pay attention to that if you are in a value company like Walmart, Target. You need to pay attention to their wholesale and turnover rate, right? So this is how you can get economic insight on how that specific sector or that specific industry, retail, is doing if you are invested in those companies. We don't have any earnings for the next 2 weeks, right? We won't have any earnings. And then as far as the futures, NASDAQ, I'm long. ES, which is S&P 500, I'm long. The Dow, I'm short. Crude, I'm short. ZB, which is the bond market, I'm short. And then Bitcoin, for the moment, I am short on a short-term basis, not a long-term basis, on a short-term basis. And then as far as notes, this week will be heavily driven by politics, geopolitical conflict, and innovation for businesses since there are no earnings, right? There are no earnings. And going back to what I always tell you guys, world conflict, resolution, politics, economics, earnings, and innovation. Those are the 5 things that you need to look at, right? So since we don't have any earnings, there's going to be more emphasis on geopolitical conflict, politics, and innovation. Initial jobless claims will definitely move the market and be important. And whichever way the sentiment goes and how the market looks as that is how the market will move based off of initial jobless claims.